Okay, then today we are continuing in chapter 8 for budgeting. And we finalized the definition for the budget benefits, the sales budget, and depending on the sales, we prepare the cash collections budget. After that, we started with the production, which is one of the important budgets in this chapter. Following the production, or depending on the production, we will explain the raw materials budget. So if you remember the sequence will start with the sales budget. So the question of the sales, how many units, and the total revenues that I'm waiting to receive for the next period or quarter, for our example. Okay. Now, how many units do we need to sell? And the dollar sign for the sales, which is the revenues. Depending on the sale, I will say how many units do I need to produce. So the production budget. For the production, if you remember, we finalize that these are the units that I need to produce. These are the units that I need to produce, right, for the production budget. So the last line in the production budget will be the first line in the raw materials budget. So let's prepare the direct materials budget, including a schedule of expected cash disbursements for the purchases of material. I will consider the first one is more important than the second one. Raw materials or direct materials one. Let's read the example, and this follows the previous examples also. At a company which is Royal, if you remember, 5 pounds of material are required per unit of product. 5 pounds of material are required per unit of product. The key, or the most important here, to know that the pound here, the pound, like the grams or the raw materials units, not the finished goods units. If I want to clarify more, suppose that we are talking about a table. Table is a finished good unit, so we need one table, but to make the one table, we need at least, let's say, 3 feet or meters of wood. So the wood here would be the raw materials, okay, and the table will be the finished goods. If we say 5 pounds here, the 5 pounds is related to the raw materials units. So each one unit in the finished goods units need 5, referring to our example, 5 pounds of material units, okay? And the management wants materials, again, considering the word materials, we are talking about raw materials. Management wants materials on hand to be in the warehouse at the end of each month equal to 10% of the following month's production. Now, again, for the same reason, the company needs a desired ending inventory. Why? To meet any unexpected demand. So if I want to ask myself, I need to produce, let's say, 26,000 units for April, I need to produce 26 or 26 plus. I will say 26 plus, which means I have to keep some units in my warehouse. For the production, we say the 26 as a finished goods. For the material budget also, we need to keep in our warehouse 10% of the following month's production. For the same reason, on March 31st, which is the beginning or the starting of our quarter here. If you remember, we are preparing the budget for April, May, and June. So the beginning inventory, which preceding our quarter. So March will be the preceding month. So any inventory comes from March will be a beginning inventory of April. So in March 31st, we do have 13,000 pounds of material are on hand. So we already have 13,000 pounds in our warehouse of April, comes from the previous month, which is considered as a beginning inventory of April, which is the same of ending inventory of March. Okay. Material cost is 40 cents or $0.4, $0.4 per pound, per 1 pound. Now, let's prepare the direct material budget. We'll start with the production budget, or the first line in the direct materials budget will be the last line of the production budget. So these numbers comes from the materials budget. April, we will have 26,000, May 46,000, June 29,000, and the total is 101,000. This comes from here, which is the last line of the production budget. Now, the question is, if I need to produce 26,000 finished goods units in April, the question for the direct material budget, what will be the materials to be purchased? Okay. The tricky word here is the difference between the finished goods and the material units. Okay. So if I say material production 26,000, I'm referring to the finished goods or the units available for sale, ready for sale. But to produce the 26,000 units or finished goods units, I need, or what is the materials needed to produce the 26,000? Go back to the question. According to the question, they give me that each unit needs 5 pounds of material. So suppose that the first line is tables, the second line will be 5 woods to be available to produce the 26,000 tables. So the materials per 1 unit given in the question to be 5. So the second line will be 5 materials per 1 unit of production. 5 pounds for 1 unit of production needed to produce these finished goods. So 26,000 multiplied by 5, the production needs of materials is 130,000 pounds of materials again. 130,000 pounds of materials. Okay. But I need a desired ending inventory from the question. I need to keep in my warehouse to for any unexpected demand in the future. I need to keep 10% in the warehouse as an inventory for pounds again from the materials to be 10% of the next month needs. Go back to the question. Look, management wants materials on hand at the end of each month equals to 10% of the following month's production. Okay, so I need to keep 10% of the next needs, and I'm talking about May, and also I'm talking about the 230, not the 46. Why? Because that 46 represent finished goods, but I'm talking about what? I'm talking about pounds. So I need 230,000 pounds for May, not 46. Okay, 46 refers to the finished goods, but the 230,000 refers to the pounds, which is materials not finished goods. So I need to keep 10% of 230,000 in April as an ending inventory of April from the 230. So 10% of 230 equals 23,000. This will be an adding or ending inventory for April. Now, I need 130,000 production needs for April, plus the 23, which represent the 10% of the next needs. So I need in total needs or needed pounds 153,000, which is 130 plus 23. But I already have, according to the question, on March 31st, which is before April, which represent first or beginning inventory of April, I have already 13,000 pounds of materials. So I don't need to buy or to buy these 13. I have it in my warehouse. So the 153 minus the beginning inventory, which is 13,000, comes from March 31st inventory. And then the answer will be the materials to be purchased in April, which is 140,000. That's all for April. Most important to differentiate between the units as finished goods units for 26,000 as production units, or the pounds, which is materials units. So the question for this direct material budget, what are the materials to be purchased in order to serve the finished goods? So I need to purchase 140,000 pounds material units instead or to produce the 26,000 finished goods. What about May? May, we need, as we say, 46,000 times 5. This equals to 230,000 pounds needed of May. Now, I need 10% from the following month, right? Following month, we do have 145,000 pounds in June. We need to keep 10% of this number in May. So I need to keep 14,500 in May too, or for any unexpected demand in May. So 14,500, the total will be 230 plus 14,500, 244,500. But I already have a beginning inventory of May, which comes from where? It comes from ending inventory of April. So the sequence here, ending inventory of April of 23,000 will be a beginning inventory of May for the same amount, right? So I will deduct the beginning inventory and the materials to be purchased of May, 221,500 materials pounds, not dollar. Material pounds. For June, this is a little bit. Why? Because we have the number we need, as I say, 29,000 times 5, we need 145,000 pounds for June. But we need 10% of the following month needs. If we say June, guys, if we say June, the following month will be what? Will be July. So I need the number related to the production needs in July. The production needs in July, which is actually not calculated in any other budget. So I will go back just to see, do we have anything in the production? No, the production gives you how many units finished goods, but also we didn't prepare the July production budget. So first we need to prepare July production budget, and then I will use this budget to prepare the materials needed for June. Okay, so I will again, for the materials I need to calculate 10%. 10%. The answer, by the way, just to follow me, is 11,500. The answer that we need, 10% of the following month needs will be 11,500. Follow me how to calculate this number. This number refers to what? To the production needs of July, multiply by 10%, right? So I need 10% of July needs to be kept in June as an ending inventory. But I don't have this number. So I have to calculate the total needs, which is production of July multiplied by 5, which is materials per 1 unit. This will give me the total needs of July, and then I will multiply this number by 10%. Now, to calculate this number, I need to calculate the production of July. Production of July depends on what? Depends on sales in July. So I need to go back again for the beginning of the question. How many units do we have in July to be sold? It is 25,000. Okay, 25,000. Then I will say, according to the production budget, 25,000 is the sales in July, right? But I need to keep what? To keep 20%. I'm preparing the production for July. 20%, according to the example, 20% of the following month's budgeted sales in units. So I need to talk about what? August. So 20% of August will be 3,000, which is 15,000 times 20%, right? So 20% of August will be 3,000. So the total will be 28,000, right? But we do have a beginning inventory of July, which is the ending inventory of what? Of June, 5,000. If you remember the sequence, total needs minus beginning inventory of July. Ending inventory of July would be beginning minus beginning inventory of July, which is ending inventory of June, which is 5,000. So I need 23,000 units to be produced of July. 23,000 to be produced of July. Multiply by 5, this equals to 115,000. Multiply by 10% to serve the raw materials budget. Again, for the 11,500 here, I need to prepare, or starting from this number, I need 10% of the following month's needs. If I'm talking about June, I'm talking about this number, 11,500 of June. I need 10% of the following month needs. So I need July needs for production, which is not calculated so far. So I have to go back to prepare the production of July, multiply by 5 to have the total needs in pounds. But I don't have a production of July. So I will go back to prepare July production first, and then I will use the number here. So the 11,500 comes from where? 10% of 115,000 pounds production budget for July, and then I would use the 11,500 as an ending inventory for June. So 145 plus 11,500, this equals to 156,500 minus beginning inventory of June will be ending inventory of May, which is 14,500, and the materials to be purchased will be 142,000. Again, the totals for the first line, it is a total 26, 46, 29. The total is 101. 5 is per pound per 1 unit, which is, for instance, 505, which is 101 multiplied by 5. Here, if we are talking about ending inventory for the quarter, then the ending inventory will refer to the last month only. So the ending inventory for the whole quarter will be the ending inventory of June only, which is 11,500. So 505 plus 11,500, 516,500. And similarly, if we're talking about the beginning inventory for the whole quarter, this will be same as the beginning inventory of the first month, which is also 13,000. Okay, 13,000. And 516,500 minus 13,000, this equals to 503,500. Or the 140 plus 221 plus 142, this will give you the total for the quarter. Okay. The following budgets budget is called cash disbursements, cash disbursement budget. Cash disbursements means the cash payments that we will pay for the materials. Okay, so Royal, as our company, pays 0.4 or 40 cents per 1 pound, and be careful about the units here. We are paying 40 cents for 1 pound, 1 pound for its materials. Okay, so we will depend definitely on the direct material budget, which is the last line of the direct material budget, will be used for the cash disbursements for materials. Okay, the pattern for our payments, the pattern, we are paying 1/2 of the month's purchases is paid for in the same month of purchase. We are paying 1/2 in the same month of purchase. The other half is paid in the following month. Okay, so we are paying 50% in the same month, 50% in the following month. The March 31st accounts payable balance is 12,000. So again, this will be a beginning balance for April. So we still need to pay accounts payable related to March in April, which represent the 50%. Why? Because in March, we pay 50% related to March, and the following one, which is in April, will be paid the other 50 in April. Let's calculate the expected cash disbursements. Again, the expected cash disbursements for materials will start with the what? With the beginning or the balance for the accounts payable, which is related to the last month. So 12,000 will be paid in April, which represent the 50% or the second half of our account in March. So accounts payable 31st of March will be paid in April. This is the first thing. Next, I will pay the purchases done in April. I will use now the numbers comes from the materials budget, the direct materials budget. I will say I need 140,000 pounds in April. This will be multiplied by $0.4. Why? Because I need to pay in dollar. So the unit will be a dollar sign. 140,000 times 0.4, this equals to $56,000. $56,000. These are what? Purchases should be done for April. Purchases should be done for April. Now, according to our pattern, I will pay 50% of this amount in April, which is 28,000. 50% of 56,000 will equals to 28,000. I will pay it in April, and the other half will be paid in what? In May. According to the question, we are paying one half in the same month of purchase, the other half in the following month. Okay, so the 56 is calculated from the previous budget multiplied by 0.4, which is given in the example. The expected cash of May, I will go back to ask, well, how many units or pounds, how many pounds do we need for May? We need 500. This will be pounds multiplied by cost per 1 pound, which is 0.4. This equals to what? This equals to 80 something, $88,600. $88,600. Okay, so these are May purchases in dollar sign. Again, we will pay 50% of this amount in May, which represents 44,300, and the other 50% will be paid in June, which is 50% of 88,600. This equals to 44,300. The trick here, if you like, June purchases, I will use the number of June from the previous budget, which is 142,000 pounds multiplied by 0.1. This equals to what? This equals to $56,800. Now, I will pay 50% of June purchases in the same month of June, but I will postpone the other 50 for the next month, which is out of my budget. Why? Because it will be paid in July. So for our budget here, which is represent April, May, and June, I will pay only 50% related to June, and I will postpone the other 50 for the next quarter. So the question, if I ask to what is the balance for the accounts payable for the quarter? What is the balance of the accounts payable for the whole quarter? This will represent the other 50% of June purchases. It is written underneath here, June 30, which is 28,400. This will be the balance of the accounts payable. Again, it will be similar to March. Then the next quarter, I will start with the 28,400 related to June. Why? Because it will be a beginning balance for July. That's all for the cash disbursements materials. Interesting. Okay. Learning objective 5, which is the direct labor budget. This is simple. I think the most important and most, let's say, detailed, sophisticated, a little bit direct material and direct labor, direct material and production. Direct labor is a little bit straightforward. Let's see what is the purpose and what is the question about the direct labor budget. If you remember the questions related to our budgets, if I'm talking about my labor, which means what is the cost to be paid for our workers here, right? So the labor will answer a question, or the question for this budget is, what is the cost to be paid as a labor, wages, benefits for the workers? Okay, the direct labor budget at Royal, each unit of production requires 0.05 hours, which represent 3 minutes of direct labor. Now, be careful that I'm talking about here the finished goods unit, not the material unit. Why? Because the labor, they will finalize a unit ready for sale, right? So at the company, each unit here, we are talking about unit of production, which is ready for sale. So finished goods require 0.05 hours, and ignore the 3 minutes. Why? Because I'm paying, according to the question, I'm paying referring to an hour. So I will ignore the minutes. The labor can be unskilled because the production process is relatively simple and formal training is not required. Royal pays its workers at a rate of $10 per hour. $10 per hour. So we are paying per 1 hour, and we need to what? To calculate how many hours for our workers times $10 per 1 hour. This will be the cost for the labor, simply. Okay, then, if I ask, what are the inputs for the labor budget? What are the inputs, or what is the key, or what is the first line, if you like? What is the first line for the labor budget? Labor budget depends on what? How many units do we need to produce? So for the direct material, we say the key is the production. For the direct labor, the key is the production. For the manufacturing overhead, and also we need the production. So the labor starts with the production budget. Units of production, 26, 46, 29. This comes from production budget. Okay. So the total will be 101,000. Now, these units needed to be produced. The next line will be the direct labor time per 1 unit in hours, not in minutes, according to the question. Why? Because I'm paying depending on hour. So direct labor time per 1 unit, direct labor time per 1 unit, 0.05 hour per 1 unit. Okay, so for April we need 26,000 units times 0.05. This will give you 1,300 labor hours required to produce the 26,000 of April. So we need 1,300 hours for April to produce the 26,000 units of April. Multiply by 10, that's all. Multiply by $10 hourly wage rate, and then we need to calculate the total direct labor costs, which is the answer for this budget. So the question again for this budget, what is the total cost of the direct labor? What is the total cost of the direct labor? For April, it will be $13,000. For May, similarly, 46,000 times 0.5, 2,300 times 10, 23,000, and so on. So the total cost of direct labor for the whole quarter will be 50,500. 50,500. Simple. For the manufacturing overhead. Manufacturing overhead is a little bit tricky, but it will be fine if I understand the key. Manufacturing overhead depends on more than one indicator, if you like. manufacturing overhead budget. Manufacturing overhead budget. At Royal, manufacturing overhead is applied to units of product on the basis of direct labor hours. Now, the key is the base for the manufacturing overhead. The base means manufacturing overhead are different types of expenses. Can be depreciation, can be maintenance, can be labor hours, can be. So we need a base to allocate the manufacturing overhead. According to our example here only, we need to understand that the base is the direct labor hours. That's why I will depend on the labor budget to complete the manufacturing overhead budget. The variable manufacturing overhead rate is $20 per direct labor hour. Look, I'm paying manufacturing overhead depending on labor hours. This is the key for this example, and it can be different for other company. So manufacturing overhead will be $20 per direct labor hour. Okay, that's why I'm depending on the previous budget. Fixed manufacturing overhead is $50,000 per month, which includes $20,000 of non-cash costs, and it is related to depreciation most likely. The manufacturing overhead budget includes what? I will start with the direct labor hours, which comes from the previous budget, but here, look, labor hours required. Why? Because depending on these hours, I will pay $20 as variable manufacturing overhead. So 1,300 for April comes from the previous budget times variable manufacturing overhead rate 20. This will give me the variable manufacturing overhead cost, only the variable, 26,000. I do have a fixed manufacturing overhead for 50,000. So I will add it to the budget. Fixed manufacturing overhead cost will be 50. So 26 plus 50. Total manufacturing overhead costs will be 76,000. 76,000. The total manufacturing overhead cost will be 76,000. I will deduct the non-cash costs because I'm not paying for depreciation, but it is still an expense. So 76,000 minus 20, this will give me the 56,000. This refers to cash payments or disbursements for manufacturing overhead, 56,000. Similarly, for May, we do have 2,300 times 20, 46. 50 is constant, like fixed manufacturing overhead cost is fixed. So 50 will be added. So the total 96 minus non-cash 20, which is also constant, 76. So the question for the manufacturing overhead budget here is, what is the cost to be paid for the manufacturing overhead? What is the cost to be paid for the manufacturing overhead? I will stop here for the calculation of the, something is very important here, which is the allocation or per 1 unit manufacturing overhead. Okay, I will use it for the next budgets. Okay. Okay then. Thank you. Okay, guys, let's continue for manufacturing overhead budget. Go back here. We need something called the manufacturing overhead rate. Manufacturing overhead rate. We need to calculate the manufacturing overhead rate in order to use it later on. Now, if we finalize the overhead budget, then the answer, I will go back to the rate, but just to connect the two subject together. So we finalized the manufacturing overhead budget. And the question was, what is the cash payments or disbursements that we will pay for the manufacturing overhead? And the total for the quarter was $191,000. And this is expected to be paid to the manufacturing overhead, calculated as we see. Now, following the manufacturing overhead, just to remind you about what do we have so far. We have sales budget, and depending on the sales budget, we prepare the collection, cash collection budget. After that, production budget, which is the most important, and it depends on the sales budget. So 1, 2, 3. After the production budget, we prepare the raw materials budget, number 4, and then we prepare number 5. After raw materials, we prepare the cash disbursements budget. Number 6, we prepare the labor budget. Number 7, we prepare the manufacturing overhead budget. Say it in other words, leave the collections and the disbursements for the materials. We prepare sales budget, production budget. Sales is the base for the production. Production, we say it is one of the most important budgets. Why? Because it depends, or we will use this budget for the following budgets. One of them will be definitely the direct materials budget, and it depends totally on the production. The labor depends also, but also it depends on the production budget. The manufacturing overhead, as I say, I will repeat the note again. The manufacturing overhead, if you think about what are the elements for the manufacturing overhead, we can say we do have indirect material as an manufacturing overhead, and we do have indirect labor as a manufacturing overhead, and we can say maintenance as a part of the manufacturing overhead. We can say rent is an example of manufacturing overhead. We can say any property taxes can be for the manufacturing overhead if it is related to the manufacturing. Now, what is the base for the cost accounting? And this topic will be explained extensively in the cost accounting. For the word manufacturing overhead, we can or we cannot say that all of these expenses or examples depending on the unit of material or unit of labor, or if we're talking about the maintenance, then maybe you are depending on the machine hours. If we're talking about indirect labor, this depends on the labor hours, not machine or material units. So we do have more than a driver for the manufacturing overhead. That's why the budget of the manufacturing overhead depends on a base, and this base should be given or assigned by the company. For our example here, go back for this example. At the beginning of the example, I told you that, look, the manufacturing overhead is applied to units of production on the basis of direct labor hours. Now, all the numbers or the costs of the manufacturing overhead should depend on this base. Okay? Why? Because we assign it. We assume that most of the manufacturing overhead expenses are depending on the labor hours. So suppose that I change this base to machine hours. So I have to think about a different base, and I need a base which is the machine hours. Same for the material hours. If I say material hours, then I have to go back for the direct material budget. So I will depend on this budget, which is material budget, and we are talking about pounds here, not units. Okay, so we need a base. Just to follow up, we need a base for the manufacturing overhead budget. For our example here, direct labor hours was our base. That's why we use the labor hours. Now, for the next budget, ending finished goods inventory budget, ending finished goods inventory budget. This is important, and depending on previous budgets. For the ending inventory, the word ending inventory means finished goods. Is it? Finished goods for our purpose here. Just to remind you that we have 3 warehouses, 3 inventories, if you like: material or raw material inventory, work in process inventory, and in finished goods inventory. Finished goods inventory. Now we are talking about the finished goods inventory here. Okay. For the finished goods inventory budget, we have to say that what is the cost to be reported. This is the answer for this budget. What is the cost to be reported as a finished goods inventory in our balance sheet, financial position? Again, what is the cost of the ending inventory that we have to put in or to report in financial position as an asset, right? Now, for the ending inventory, we need to say that the finished goods inventory includes direct material, direct labor, manufacturing overhead from chapter 1. The product which refers to the finished goods ending inventory is a product at the end of the day, or if you remember, inventoriable cost. We called it inventoriable cost or product cost. The product cost related to the finished goods is a product. The product includes what? Direct material, direct labor, and the manufacturing overhead. Now, from the direct material budget, we need 5 pounds. Direct material budget, we need 5 pounds for each unit, right? And each pound I have to pay $0.4. So the cost for the direct material for each finished goods unit will cost $2. For the direct labor, again, guys, I'm trying to calculate the cost per 1 unit or 1 finished goods unit. The cost per 1 finished goods unit. The cost per 1 finished goods unit, which is related to the ending inventory that I have to report to the financial position as an asset. So what is the cost? Suppose that I have 1,000 units as a finished goods, multiplied by the cost per 1 unit. So what is the cost per 1 unit? I'm trying to calculate it in this slide. So when I say the production costs, the production cost per 1 unit, this includes direct material, direct labor, manufacturing overhead. As we learned in chapter 1, these are called the product cost. So direct material, from the budget of direct material, we need 5 pounds for each unit. The pound costs 40 cents, if you remember. So multiply by 0.4, and the answer, which is $2, which is the cost of direct material for each production cost per 1 unit. Okay. For the direct labor, from the labor budget, we need 0.05 hours per 1 unit. Multiply by, I'm paying $10 per an hour, so I need to pay $0.50, $0.5 for each finished goods unit for the labor. For the manufacturing overhead, from the manufacturing overhead budget, we need 0.05 labor hours. Why? Because this is the base, right? Multiply by what is the cost? What is the cost for each hour? For each hour. And this is calculated from the the equation written underneath. And this is what we call rate. For any future work, we have to calculate the manufacturing overhead rate. Go back to the to the manufacturing overhead budget. From the total manufacturing overhead costs, which is in the middle of the budget. Total manufacturing overhead cost. This is expected for the future, is it? This is expected for the next quarter. Now, the total labor hours required to prepare this budget is the first line here, which is 5,050. Now the rate or the expected rate or the allocation rate, we call it sometimes manufacturing overhead allocation rate for 1 unit, which is the hour here, is equal to total manufacturing overhead costs divided by total activity, which is hours or labor hours here required. Okay, so total manufacturing overhead always divided by the activity that we need to use. In this example, we do have the labor hours as our activity. So the total manufacturing overhead hour cost was 251,000 divided by 5,050 hours or labor hours, which means each hour will cost the company 49.70 for $49.70 per 1 labor hour. This is called, and this number is rounded, this is called the manufacturing overhead rate or allocation rate. Why we need this? Because we need to calculate the cost for the finished goods unit as an ending inventory. Now, for the cost for 1 unit, we need to say for the manufacturing overhead, we need 0.05 labor hour multiplied by 49.7, which means each unit of the ending inventory will cost 2.49 from the manufacturing overhead. To summarize again, the product or 1 unit of product, it includes 3 things: direct material, direct labor, and manufacturing overhead. What is the cost of direct material? It is calculated to be $2. What is the cost of labor for the 1 unit? It is calculated to be $0.50. What is the cost of the manufacturing overhead? It is calculated to be 2.49. How to calculate these numbers? Go back for the second and the third column. Now, the cost per 1 unit then is equal to $4.99. So, budgeted finished goods inventory, the 5,000 comes from where? Go back to the what? To the production unit budget. Look, for the production budget, at the end of the quarter, we do have an ending inventory to be 5,000 units, and we mean finished goods units here, right? So what is the cost of these 5,000? Now, our slide or current slide, which is in objective number 6 here, we do have to calculate the budgeted finished goods inventory as a cost. So 5,000 multiplied by $4.99, and this equals to what? $24,950 to be reported as an ending in finished goods inventory in the financial position. The 5,000 comes from the production budget times the cost per 1 unit equals to the cost of the whole ending inventory. This will be the second part of the lecture, and I will stop at the beginning of learning objective number 7. Thank you.